Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, July 17th, 2018, and this is the Daily Report for Gold and Silver. Following statements made by Jerome Powell, the Fed chairman, we saw gold, silver, platinum, and palladium drop dramatically in price. Gold losing almost a full percentage point, currently down $12.30 at $12.2740. That, of course, is basis the most active August contract. Silver gave up even more, dropping almost 1.5%, giving up 22 cents at $15.59. Platinum, approximately a full percent, giving up $7.60 at $8.18. And finally, palladium dropping $5.70 to $9.07. Now, dollar strength was a major component of today's drawdown. And as you can see, the dollar gained about a 0.5% on the day. Considering that gold lost a full percentage, we can see that today's loss was a combination of equal parts of selling pressure and dollar strength. One of the byproducts, of course, of his statements was a robust move in the equities markets. Dow Jones Industrial Average gaining 55 points at 25,119. The NASDAQ also jumping higher at 78.55. And finally, the Standard & Poor's at 2809. As a direct result of testimony by Jerome Powell today, we saw a major decline in precious metals pricing, specifically gold, losing about $12.30. Now, the key is that it had recently attempted to form some sort of base or a level of support right at around $12.38. This, of course, matches up with these lows that came in back in December, and therefore a very, very critical area. Based on that and based on the size of the move that we saw today, I would have to say that today's move did inflict technical chart damage. And so the question becomes, should gold continue to decline, which I believe it probably will, as long as these fundamentals remain intact. Where can we expect gold to go? And in terms of my current targets, we have to look at a couple of areas that came in, and specifically one of the most prominent areas is just above 1200, which is where we saw gold trade to in July. That's right here, as well as March's lows of last year, which came in between 1200 and 1195. So I believe that today's move is signaling a further decline, and our target remains at about $1,200 per ounce. And traders, the target that I just spoke about is my interim term forecast in the market, what I believe we could see transpire over the next 3 to 4 months, that move to 1200. However, on a longer term basis, based upon the testimony by Powell today, in which he stated they are going to A, stay the course, B, look to implement interest rate hikes right now at every 3 months, meaning 4 hikes per year, as well as continue the balance sheet reduction, we must acknowledge a real possibility that the basis of gold moving up at the beginning was quantitative easing, and that, of course, began to occur really after 2009 and the housing crisis, or the banking crisis, and that really propelled gold to a dramatic level of 1900. And now we are in a period of quantitative normalization rather than quantitative easing, and over time, meaning over the next couple of years, should he continue to raise interest rates at 4 per year into 2019 and 2020, of course, we could see easily gold move back dramatically lower than that. We could see it move back to at least the point in time in which this rally began. That comes in at around 1040, with the possibility of actually going to these levels that come in right at around 1,000. Now, that would be a very, very long-term forecast should the Fed stay the course, maintaining rate hikes at the pace of 4 per year over the next couple of years. Now, silver also had a dramatic decline, losing about 1.5%, a full percent due to selling, and 0.5% approximately due to dollar strength. What is interesting and noteworthy about today's activity is considering some of the recent lows that came in the marketplace today, we actually broke below that at 1562. Of course, we're looking at a weekly chart, which now moves our new target to these lows that were achieved back in July of last year. They also correspond to the lows that we saw in gold, and they come in at roughly $15.10. Traders, we have talked about the fact that what we have seen recently over the last couple of months was a simple correction really morph into a bear market. One of the indications that we saw was the death cross, where the 50-day moving average crossed below the 200-day moving average. That signaled that today's lower low absolutely inflicted some substantial chart damage as we broke below this major level of support here, and that is why we have now revised our target to $1,200 per ounce, and that of course is based upon the lows that came in July of last year. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.